Escorts Kubota joins us now. Mr. Madan, good morning. Thanks for joining in. At 8.1%, these are the lowest margins that Escorts has hit in a very long time. Can you tell us when do you expect normalcy to return? And will the second half of the year also continue to clock in single-digit margins?
Hi, good morning, Sonia. Yes, you're right. I think the margins have contracted, and we've been pointing this out, because the very heavy inflation, which is still unabsorbed, because the inability of the industry to pass it on to the market. Because we know if we go beyond a point in the price increases, that will start impacting the demand. So luckily, the demand has been good, so which is visible in the volumes for the industry as well as for the company. But the margins have been under pressure. And if you look at last 6-7 quarters since the time the inflation started, and the margins have been coming down. And typically, it's an impact of numerator denominator, because you'll be able to pass it on the impact, but still it impacts your margin as a percentages. So we expect, I think the decline was also gradual, and same with the recovery will also be gradual. It will not happen overnight. It will take few quarters really to go back to the normal margin level. And we expect at least 4 to 5 quarters to be the sort of time, which will take us to the normal margin levels now.
But have margins hit a bottom? Can you say that confidently?
Yes, we believe so. So we believe because the inflation pressures are now softened now. So in the last quarter, there was hardly any inflation. So at least it's more like a neutral quarter for us. And from Q3 onwards, we expect the benefits to start coming in for the deflation and the commodity prices. So from here onwards, the things should improve. So we think this is our bottom now. So we only should look at the positive side going forward. Next
it may take 4 to 5 quarters for improvement, right? It's going to be very gradual.
Yeah, that's right. The decline also has been gradual, but the deflation doesn't set in overnight. Obviously, the recession condition which we're looking at globally are going to happen gradually, and that benefit will start flowing in into the commodities market now. And we hope, I think that recovery should be visible now in the margin from next quarter onwards.
Also said that heavy inflation is hitting the industry and it's hard to sort of pass on the cost to consumers. So is it a strategy on Escorts front that you're willing to perhaps sacrifice on margins, for higher volumes? Because you're not only lost margins, but you're losing market share as well.
Well, it's not really the story with market share. I think if you look at this quarter, the market share actually has gone up. So till June quarter, yes, the market share losses were there, post which we took corrective action in the market. And some of that related to, in terms of especially the low-end models, where the impact was coming very heavily because of this inflation. So this is a very price-sensitive market. So we had to take some certain corrections in those pockets. And that result is visible in this quarter. So the market share actually has gone up by about 70 basis points. So after almost 1 year of losing market share, this is the first quarter we're seeing the positive traction has come. And October, the market share had gone up beyond 11%. So I'm sure these actions are taking fruit, and we'll see the result coming in. But as you know, this is a very highly volume-sensitive industry, so the volumes are the key. So I think even if it means some sacrifice in the margin, especially for the price-sensitive market, it still makes sense.
Okay, all right. So, Mr. Madan, if you could give us a sense, where does this market share move to? As you said, some bit of recovery from the lows. You briefly mentioned 11%. What is the targeted market share? If you could give us a sense of that. And also your smaller part of your business, the construction equipment segment, out there it reported an EBITDA loss. It was a negative margin. Does that go back to profitability from here on?
Yes, I'll talk about the tractor business first. So, as you know, the normal margin tractor would be somewhere around 14 to 15% level, which is what I said it will take few quarters for us to leave that level now. But in terms of market shares, we are already at 11% plus in the month of October. And normally, Escorts typically, since the more northern central focus market, which is the more seasonal months in the second half of the year. So normally we got a higher market share in the second half, which is seen becoming now visible from October onwards. So we hope by the time we end the year, the margin share overall will be better than the last year, definitely. And from here onwards, we only look at the recovery happening in the coming year too. And good thing is this time the stronger markets have done very well, especially the markets in North and Central doing extremely well. And South has been weak, which has gone in favor of the company also in this period. On construction, yes, there have been some losses. The last year, if you look at the volume front also, so it was the second quarter where the volume, there's some pent-up demand was there, where the first quarter had seen some of the impact of the second wave of COVID, and also because of the emission norm which had come into effect from the first quarter. So that had impacted the demand in the last year first quarter, which got shifted slightly to second quarter. So that's why the base for second quarter had gone up. So what we don't see any negative or downside, on the construction equipment side. The infra story is still intact, and we are looking at some good orders coming in, on that front. And normally second half post-monsoon is the time when construction activity picks up, and we expect the volume will pick up now in the second half of construction business too.
Okay, I guess Nigel's question was also more on profitability, but you said that on the tractor industry volumes, you had guided for a mid to high single digits growth for the industry by FY23. Given what you've seen in the first half, would you stick to that growth guidance?
Yeah, because earlier we were actually guiding for the mid-single digit sort of growth, low to mid-single digit, and now we're looking at the first 7 months now, the growth has been close to 7.5%. So we expect the volume growth will continue. So it'll be somewhere in the high single digit now. It won't touch double digit, doesn't look like that. But again, this should be a new record peak industry level, which industry can touch in this year.
All right. Thank you very much, Mr. Madan. Appreciate you joining in with that perspective, and good luck on margins. It'll take, as you said, it fell slowly, it'll rise slowly, it'll recover slowly as well over the next 4 to 5 quarters. Well, the market's lost almost 70 points actually.